Hi, I'm Brad Rosley. Thanks for tuning in again today to another episode of Smart Money. As a certified financial planner, I'm dealing with all the different situations that we face, and today it's our reaction to the coronavirus and how it impacts us all financially, and most importantly, going to be talking about the CARES Act that was recently signed by Congress and President Trump into law. Today's episode, I'm going to be talking about the individual handouts and things that are going on, not the business side. We'll do that another time. On the individual side for the CARES Act, I'm going to cover several points, including cash rebates, college impact, IRA impact, unemployment at the end. So stay tuned for all of these, as I'm going to hit on all these in the next several minutes. So let's start by talking about the cash rebate. The cash rebate is set up to give $1,200 per individual. That'd be $2,400 for a couple married filing jointly. The income limitations, $75,000 as an individual, or married filing jointly is double that, or $150,000. They want to give you $1,200 each. They also want to give you an extra $500. They will be giving you $500 if you qualify, if you have a child dependent under age 17. So a family of 5 with 3 kids, 2 adults, and they make under $150, and the kids are all under 17, is going to get $2,400 plus another $1,500 or $3,900 from the government. They're going to look at your tax return in 2019 if you filed, or 2018 if you haven't done this year's yet. They should be shipping that money out the same way that you filed. So if you gave them your bank account number, they plan on sending it directly in there. If you didn't, then they'll be sending you a check. Either way, it's going to take, I'm sure, a few weeks till that's done. I know they're doing the best they can to get that money out as soon as possible, but expect it to be a few weeks out. Second benefit is for those of you that have student loans. They are going to, federal student loan payments are deferred through September 30th of 2020. A very nice break during these tough times. If you don't have any money coming in or your hours have been cut, it's nice not to have to make that payment for the next 6 months. Talk about next is retirement accounts. Several changes here. Before I mention that, let's talk about your tax return real quick. Tax returns are no longer due on April 15th. They're not due till July 15th. It's not necessarily a great thing, as we tend to procrastinate. If you're expecting to get a refund, I wouldn't wait to file. I would file immediately and try and get that refund as soon as possible. But since the tax filing is no longer due on April 15th, now July 15th, you also have till July 15th to make those IRA contributions if you're eligible to make those. So take advantage of that if you can. One other major change regarding retirement accounts. Actually, there's several within that retirement account realm. Senior citizens, those over 70 and a half, have been taking something called required minimum distributions from their IRAs. For 2020, those are waived. You do not have to take those, even though you might need them, of course. And in not needing those, that same thing applies if you're over 72 and just started taking them this year as well. And lastly, if you've already taken some or all of your RMD, required minimum distribution, for 2020, if it's within 60 days, which it would be for many of you, you can actually return it without penalty. You can send it back within 60 days. You might also want to convert that money to a Roth IRA if you don't need it. You can do that as well. Another retirement plan impact is for those of you with 401ks. A lot of people have 401ks and they think of that as a source of money. Well, it could be via loan. Typically, the maximum amount you can take out of a 401k loan is $50,000 or 50% of the vested balance. Those numbers have been doubled. You can now take out the lower of $100,000 or 100% via 401k loan. It's a one-time opportunity that hopefully is not something you need to do, but it is available. And you also have an extra year in which to pay that money back. So that's a great thing. If you did take money out of a IRA going forward, you're normally supposed to have withheld 20% from the institution that's taking the money before they send it to you. That's also being waived. So if you're taking money out of an IRA, that's not a 401k, an IRA to IRA or IRA distribution, they normally withhold 20%. They wouldn't do that now. This year, that's being waived as well. So keep that in mind. On all these exceptions, and things like taking that loan out, on the loan out from the 401k, you have to give some kind of a financial hardship reason having to do with the coronavirus. Maybe you got laid off, maybe you need help with childcare, maybe your hours were reduced, or your spouse's, or something, some sort of financial hardship, which I think they're going to be very lenient on, to say this is why we need to take advantage of this extra break. So be prepared to do that just in case that happens. The last thing I want to touch on is a big one, unfortunately, for millions of people. Right now, we had over 3 million unemployment claims. I expect that number to go up substantially here in April. April is going to be the worst month. The CARES Act expands unemployment eligibility and offers workers an additional $600 a week for 4 months. $600 a week for 4 months on top of what the state programs are already expected to pay for eligible workers. They are going to cut deals. I don't think it's 100% clear yet for self-employed and independent contractors. The issue with them is they don't really pay into unemployment. So I'm not sure what they're going to do, possibly things on small business loans. I'm not sure yet. That has not all been finalized. So how do you get the unemployment benefits? A lot of people are asking about that. You go to your state unemployment website. You don't have to go into an office. It's online. For example, in Illinois, you go to IDES.gov, Illinois Department of Employment Security.gov, IDES.gov. Right on the website. I've already looked at it for people. And depending on the date of your, or the first letter in your last name, you have the first half of the alphabet, they got you applying on Monday, Wednesday, and Friday. The second half on Tuesday, Thursday, and Saturdays, because they're so overwhelmed, inundated with people applying right now that they're having a tough time handling it at all on the website. I wouldn't wait to go ahead and apply for this stuff. I would get on it right away because there's going to be a backlog. These computer systems may not be ready for this. The government computer systems don't always work the best. Think of Obamacare. It didn't work at all. Computers aren't ready for this. So get in there and apply soon. I would be a little bit patient. I'd expect them to be a few weeks out until the payments come, no matter what they say. Some states will be much faster at this than others. If you have any questions about this or other financial things, for example, you want a portfolio review, you're not sure how this is going to affect you income tax-wise because your investments have dropped in value. Maybe you want to rebalance your portfolio, look at your 401k or IRA. I'm offering a special 30-minute, no obligation, no strings attached opportunity to either have me on a call or do a Zoom meeting, and I'll help you. I'm trying to do my part as a certified financial planner to help those in need during this difficult time. My website, if you want that, is fortunefinancialgroup.com. And please give me a like on my YouTube and hit a share so that other people can learn this information, because right now there's a lot of people who don't know what to do. I hope to help them. Thanks a lot for listening. Have a great day.